Good morning, and it's Friday. Thanks so much for tuning in. The US markets were doing okay yesterday. Upward trajectory continued, driven by the exuberance surrounding artificial intelligence and bets. I reckon that the Federal Reserve will have to conclude its policy tightening cycle sooner rather than later to avoid an economic recession, according to at least the Bloomberg studies. Though I doubt that there is an economic recession coming from the kind of feedback that we're getting from people who are currently on the in the US trying to get a sense of what's happening to the economy. The gauge of the US listed Chinese stocks also jumped, by the way, with Beijing seen rolling out more stimulus to help the economy. So all looked okay on the US markets front, and the other cues also seemed fine. In fact, led by all of this, oil has also held on to its biggest jump in 6 weeks on these Chinese stimulus signs. So that is the other thing that is kind of moving after having a slam dunk for the last few days. The last couple of sessions, oil has actually moved high. So the global news flow has one piece on oil, of course. Gold is ending the week slightly lower. So that's also to be kept in mind. Virgin Galactic has soared nearly 34% after targeting a June commercial flight. And in other news, by the way, as per the Economic Times, Foxconn is seeking to set up an electric vehicle factory in India. So lots happening. There is also a Mint report, by the way, viewers, that Singapore Air is looking to up its stake in Air India from 25% to 40%. They are in talks with the Tata, so on and so forth. So lots of India attention, you have to admit. In fact, there is a conversation that we've done with, I think, uh, yesterday or day before with ASK, which spoke about healthy flows into India. And I think that is something that you want to monitor as well. Now, the trade setup for the day. The Bank Nifty, of course, continues to remain the key drag from our market's perspective. Heavyweight stocks are under individual clouds of weakness for the Bank Nifty, right? HDFC Bank has this mutual fund overhang. Kotak Bank continues to have this supply overhang, as does Axis. So when you look at heavyweights, and SBI, by the way, has a large short build-up, that's down 3% over the last 5 days. So when you look at individual pockets in the Bank Nifty, each of these have this weakness, as a result of which the Bank Nifty continues to remain a drag, and very difficult, therefore, to see sharp upsides for the Nifty with heavyweight sectors like banks or IT looking slightly wobbly. Now, can IT make a bit of a comeback today because Nasdaq has done well? There are a lot of shorts in the system. Sure, it could, but could it be decisive? I really doubt. And therefore, if nearly 45% of the index weightage, or over 40% of the index weightage, whatever the exact percentage may be, is under this overhang of selling stroke weak macros, very difficult to see the index move up meaningfully on the back of the other 50%, which is all chalk and cheese. So I can't fathom what will it take for the Nifty to move to that higher levels unless the individual components within banks start to make a move. So I think that is to be watched out for. The management commentary from the CV sector, though, seemed okay. And smart money that I speak to is hunting for opportunities in the commercial vehicle and the ancillary space as well. So that is one pocket that people might want to do some research on. FI flows continue to be positive, and I think this is what yesterday some of the people who spoke to dealing desk suggested, that there was no need for a panic, simply because the FI flows continue to remain okay, and that was to be kept in mind from a very short-term trading perspective. Stocks to watch. Now, I haven't given the view around the news around Tech Mahindra, but that could remain in focus as well because companies appointed Mohit Joshi as the managing director and CEO of the company with effect from December 23rd to June 19th. So now a new CEO in place. Some smart money yesterday has initiated fresh long positions, as I hear from dealing desks on Tech Mahindra. So that's to be watched out for. Then the news flow surrounding Titagar wagons and subsequently RK Forging ceases to exist, ceases to die down. It's just quite stunning what's happening with those railway plays. So both Titagar Wagons and RK Forgings have won another order worth 12,000 crore rupees to manufacture and supply 15 lakh 40,000 forged wheels over a period of 20 years for Indian Railways. It sounds eerily similar to the order that they just won. So I hope it's not a repeat, but or I hope it's not an error from mine. But This announcement came in late last night at about 10 p.m. and it's pretty stunning, the kind of order wins that they are getting. 40,000 forged wheels to be delivered during the first year, 60,000 in the second year, and 80,000 every subsequent year. And these stocks have run up quite a bit, viewers. You've got to keep in mind. Titagarh in particular has had just a splendid run. But RK Forgings, when they first put out that guidance of 5,000 crores of revenue in January or February, was trading at maybe 250. It's now at 400. So there has been a sharp 50% appreciation in that stock too in the last 3 to 4 or 5 odd months. So please bear that in mind. But the announcements, not just this, but the recent announcements seem to be positive. I think RK Forgings 2 days ago also put out an announcement of winning some small but a global European order as well on the forging side. So things are looking constructive for them. Then BHEL and Eicher Motors. So BHEL and Volvo Eicher commercial vehicles have inked an MOU to jointly develop and deploy Type 4 hydrogen and CNG cylinders in the commercial vehicle segment. Could be constructive for both. It's obviously good for captive usage for Volvo Eicher too. I wonder if there is also an understanding to do this for other companies, but time will tell. But certainly both stocks in focus. For both Torrent Pharma and Natco Pharma, the US FDA has issued an establishment inspection report after inspecting the facilities. In Torrent's case, the oral oncology manufacturing facility in Bileshwarpura, and the case of Natco, the drug formulations manufacturing facility at Vishakhapatnam for the last few days. So watch out for both of those stocks. Like I said, CV players are looking okay. Ashok Leyland did an analyst meet yesterday. I thought we'll get in the brokerage views for you. So MK Global has retained a buy. They said that the management highlighted ambitious market share-led growth targets across categories. Mid-teens margins is something that the management seems to be targeting to enable higher investment spends in the view of the need for multiple technologies. The management has reiterated the MHCV industry volume growth of 10% and double-digit margin guidance versus 8% in FY23. So they say that the domestic CV industry could witness moderation on slowing macros and a high base, but they will do well. So there are two ways to read this. One, that Leyland could outperform and Leyland could have growth strategies of its own which enable it to express such confidence. But if the MHCV industry per se or the domestic CV industry itself is going to shrink a little bit, then some of the other players might not. But like I said, based on maybe Ashok Leyland commentary or commentary from some other companies, smart money is looking to pick up relevant bets in the CV and the CV ancillary space. So that you got to bear in mind. Morgan Stanley is overweight, in fact, with the target price of 178. Goldman Sachs, neutral with the target price of 155. So a lot of coverage there on Ashok Leyland. As also on CEAT, by the way. I mean, but actually, before I get to CEAT, the other note to focus on is Jeffries on real estate. I thought it was a nice macro view of sorts of Mumbai real estate. They're saying that the completion of $10 billion worth of 4 landmark infrastructure projects in Mumbai over the next 18 months will provide a long overdue infra upgrade to India's largest property market. And trust me, because I stay here, I mean, this is just something that Bombay really badly needed. I'm glad that it is getting it. Another $60 billion worth of large infrastructure projects are planned over the completion of the next 3 to 7 years for Mumbai. The upgraded infra will likely flatten the pricing pyramid and attract fresh economic activity. One certainly hope that happens. And Lodha, GPL, Oberoi, Suntech, PEPL are some of the key beneficiaries, according to Jeffries. I'm not surprised that they're pointing some of these things out. What else? Is there something that I've missed? I'm sure I have. So let me just try and see if, yeah, so there is a note from Nomura on PNC Infra, wherein they are talking of a target price which is high, which is 375. They're saying the asset divestment. PNC will going to sell about 12 road assets to KKR's Infrastructure Trust. They say that the asset divestment could lead to a re-rating for PNC Infra. So do watch out for this one. It's no longer a small cap stock, to be very honest, but could be an interesting one. KEC International apparently had an annual investor day as well, and that stock as well. The target price remains 598 versus the current price of 552 for Nomura, but they are talking about 15% revenue growth in FY24 and ordering for growth of about 10 to 15% in FY24, which is not too bad. So do watch out for Case International to watch out for CET as well. Sounded a bit mixed and ho-hum, so don't quite know how much of an uptick there in CET, but yeah, do watch out for that one for sure. Um, yeah, broadly, these are the stocks that I thought should be um, interesting to watch out for. Uh, yeah, TARC has eyeing some stiff revenue, so that is to be watched out for as well. Net, eagle eyes out of T2T segment, so maybe that stock could also react a bit. So that's the long and short of the trade setup for today's session. And of course, lots of individual pockets to monitor. Lots of interesting conversations lined up today. I'm watching out for the conversation with Ravi Dharamshi. He tweeted last week that his tours of global or conversations with global fund managers seem to suggest that there is a beeline of money waiting to come into India. So that's to be monitored today. That's a good conversation that I'm looking forward to. And some, of course, trade-related conversations by my colleagues during the day. Vinit Bolinchkar of Venture Securities joins at 11 a.m. with the stocks in focus, and trade talk with Rupak Day of LKP at about 3:15. Well, thanks so much for tuning in to this edition of the Trade Setup. And if you don't see me on Talking Point, wishing you a great weekend. I'll see you with the Trade Setup on Monday morning.